I've got the chart here. Last week was a big bear bar closing on its low. So you can see the moment we opened, zero tail, just went down all week. Hi, everyone. My name's Tim Fairweather, and welcome to the FTSE 100 Futures Index weekly report, which we're now doing in video. So please give us some feedback about that. So I've got the chart here. Last week was a big bear bar closing on its low. So you can see the moment we opened, zero tail, just went down all week. I think that's because we had a bull spike with a strong gap, went up to a new all-time high, and then the second leg had a little bit of difficulties. We had a bad high one here above a bear bar. Then we had bad high two. Okay, well, that's the first high one above a bull bar. Is that a buy signal? You didn't get filled here. You didn't get filled here. This was the only buy signal where you could have got filled one tick above, and the market went up to the gap and down and would have stopped you out if you had a closed stop. So it was a little bit tricky for the bulls to buy up here. And the bears took over. As soon as they had a bear bar here and had a big distance down, they sold above that bar. And so bears are in the trade here. Any bulls, I think, that bought up here were buying to get back to the position that they had earlier. Most bulls in this kind of environment, I was one of them, were looking to buy at the moving average below a bull bar and with a wide stop looking to scale in. And the trade was to the other side of the channel, or wherever a buy signal would be. So my target was the high of a bear bar, which was there. And so it looks like we're going to form a triangle, kind of condensing the range into a tight trading range. But what do you do here? Well, it's a bear bar closing on its low. So that gives Monday a high chance of having a gap down, but it's in a bad place to sell a rising moving average above the 200 moving average, bear bar closing on its low. So some traders might sell there. Others might wait for some kind of a pullback to sell. Now, I think this is going to continue sideways a little bit longer. You could see in the broad channel before, we had a lot of breakout modes and then new high, multi-legged pullback, big flag, breakout. And then we're doing the same thing. What the bulls would like is to trap the bears on a weak sell signal like they did here, and then get to a new high. That would have been really good to send us up to a new all-time high. And I've got a measured move a little bit above. But at the moment, it's all sideways. So I'm expecting sideways to down potentially next week. If I'm a bull and I just exited there, if I'm another bull and I got out of that position, probably don't want to buy at the moving average yet. I'll wait for a bull bar. So I think a little bit more down, but we're coming back into a channel, and that channel is a buy area for higher time frame traders. So perhaps even this tight trading range here, that might be a bit of a magnet for another test. So that's what I think for the FTSE 100 weekly. For the FTSE 100 daily chart, you can see that we had 5 bear days. So we've got a bear micro channel. That's where every high is below the low of the price. So we've got consecutive lower highs. I got it. Consecutive lower highs. So no pullbacks in here. You can argue the inside bar here is a pullback. So one pullback and we're on the second leg. This was looked like a wedge top to a double top. It's a lower high double top, and it's now a bear spike. And the bears would like something similar to form into a channel. Where are they going to? Well, down to close that gap, down to the prior all-time high, and maybe even to the 200 moving average. The issue for them, I think, is that this price, for whatever reason, was very, very popular for many days, many weeks. And so we're coming back into that zone. So I'm not expecting for this to just plunge straight through. I think we're going to spend some time around here. We might go down and come back up, which seems to be the behavior. But is it always in short? Well, we've got 3 consecutive bear bars below the moving average. So that's good enough for always in short. But we're in the context of a trading range right in the middle. So if you're short, I think okay to stay short. And if you're looking to sell, you haven't really had a pullback and a low one that made sense. And that happens in a trading range. You just kind of climactically move to each side. So if you're not ready to take the trade, you kind of miss it. It's not a buy signal for next week, and it's closing near its low, so more likely that Monday will go sideways to down. As I said, I think the target will be that gap there. The bears missed their second entry sell at the moving average, and they got trapped. So you imagine you've got a bear spike, you sell at the moving average. This is if you're selling without a signal bar, which we don't advertise in the course. We think it's better for you to wait for a signal bar. You have to sell and sell higher, and now you're back to that entry. So this could be a layer of support. And the same things happen to the bulls, which is hence the trading range. The bulls bought, they've got a bull spike and channel, look to buy at the moving average. Oh no, they got stuck. So some of them will take a loss, some will scale in, betting that we're going to do a little bit more like this, and they'll get out of that trade. The pain trade would be down if this just kind of goes down to a new low. Neither side have got control over the trend, and that's why I'm more likely to go sideways here. So that's my outlook for next week. I think we're always in short on the daily, but we're still in a tight trading range on the weekly chart. So expecting sideways to down. Thanks very much. My name's Tim Fairweather. Thanks for watching.